Yeah, hello everybody. This is nice that you are back to the channel. This is again a video on business taxation, and here's the overview of everything we have to do in the course of the semester. And we are still very much at the beginning, so let's look what is on the schedule today. This is part number 7, again the taxable income. We are going to talk about this again. So a very important rule is the specific rule of paragraph 8, section 2 KSTG, so of the Corporation Tax Act, because there we have a rule which says that for certain types of juridical persons, the classification of the income is strongly simplified. For GmbH, AG, SE, and their foreign counterparts, so capital companies as they are called, that would be a limited company, a société anonyme, a société à responsabilité limitée, an incorporated, a corporation, a BV, an NV, or however they are named in foreign legislation, and certain other legal forms. There is a simple rule that all income is automatically classified as income from business. So whatever they do, it is classified as income from business. That rule applies to most legal forms which are to be founded for economic purposes. So not for private associations like a chess club EV or so, but certain legal types are meant to be run for running a business, and then tax law follows that and says everything they do is automatically classified as income from business. So, consequences of that rule. Your life becomes far more easy when you test such a case, because it's no longer necessary to examine each individual event for the question to which type of income it belongs. Everything becomes automatically income from business. You directly see that when you have a look to the legal form, and so you directly know you're right. Everything which is going to come during the whole lifetime of that, let's say GmbH or AG, must be income from business. Automatically, that leads to the conclusion that property which is used for business is automatically classified as business property. So a GmbH can never have private property. And you know the basic distinction still in German income tax legislation. There is business property and private property. Business property, when sold, is always taxable, whereas private property can, under certain circumstances, be sold tax-free. So now, as everything which a GmbH or AG or limited or so owns in Germany is automatically classified as business property, selling it will be automatically taxable. The tax base, well, that was our second question when we deal with an income tax case. Naturally, as corporation tax is the income tax of juridical persons, we follow that basic logic and ask now, what is the tax base? But as we, in these cases, always have business income, we always have to determine the profit, never the surplus of revenue over expense. And then there is a rule how the profit has to be computed. If a balance sheet and a profit and loss statement have to be made, and in case of a GmbH, an AG, or another similar corporation, a balance sheet and a profit and loss statement always have to be made. Then you have at the end of the year not thousands of single events, but you only have one single result, the profit of the year, determined by balance sheet and profit and loss statement, so determined by bookkeeping. Everything the enterprise does during the whole year is condensed into one single result, the profit. Now, when is the profit received under tax law? There is a fiction which says if you have an accounting year, the overall result of the whole year is deemed to have been obtained or earned on the last date of the accounting year, so on the date of the closing balance sheet, then the whole profit for the whole year is deemed to have been earned on that day. So we can, if we have a legal form like a GmbH or AG, we can automatically, without going into details or without needing to look to the details of the case, we can automatically begin to write down the first steps of a solution. First, personal tax liability. The GmbH or whatever it is, if it has place of management or seat in Germany, is subject to unlimited tax liability. Under one number, usually 1 KSDG. Then we have to check the taxability or tax treatment of what happens, so of the tax object, that means the income. A general introduction can be made. Under KSTG, the income has to be computed according to the rules of ESTG and KSTG. We already found that in the last chapter. See paragraphs 7.1, 7.2 and 8.1 KSTG. There will be no free allowance of 5,000 euro, by the way, because a GmbH or AG is a legal form which can pay dividends, so they are not entitled to that small free allowance. But now we can see that under paragraph 8.2, a GmbH is one of the legal forms to which that simplification rule applies. So everything it earns is automatically classified as income from business. But ladies and gentlemen, I feel a bit of ashamed because of my behavior just up to now, because I told you about that rule of paragraph 8, section 2 KSTG, and I just demanded indirectly that you should believe me. That's naturally not a very academic behavior, so naturally we should look that rule up. And so here's again the Tax Act slides, which presents you a small translation. Keep in mind the disclaimer. These translations are rather roughly made. They only convey the general contents of the legal rules in Germany. So don't rely on them without checking everything, asking somebody who knows the original German text, and best if you want to rely with decisions on these things, there is a simple recommendation: don't ask a tax advisor instead. Well, you will probably do that automatically, so let's jump to the KSTG, and at least I hope it works. Here. And now we need paragraph 8, and we need 8.2. And here is the decisive rule 8.2. All income of a taxpayer subject to unlimited tax liability. So we only do that reclassification with corporation tax subjects which are covered by unlimited tax liability, not with foreigners. And if it's covered under the numbers 1 to 3 of the Corporation Tax Act, then we do it. Otherwise, we don't. So that shows you why starting with personal tax liability and there looking very much to the details plays an important role. So let's go back again to the KSTG and have a check, which we made to 1.1. Is a GmbH really 1.1, number 1, 2, or 3? And indeed, we find here subject to unlimited tax liability are the following corporations, associations of persons, and masses of property. That is a general way to describe juridical persons and quasi-juridical persons, you remember that. No, no, and indeed companies, especially European societies, AG, KGaA, and GmbH. Yes, here it is. So indeed we are right, and so indeed paragraph 8, section 2 KSTG applies indeed to our case. Everything's right up to now. So let us go on with our conclusions on this case. So we have everything is business income. So the tax base is the profit for everything which the GmbH does, and the reference to the legal source would be paragraph 2, section 2, number 1 ESTG, which says for business income, the tax base which you need is the profit. The profit has to be determined regularly by balance sheet and bookkeeping. See paragraph 4.1 ESTG. By the way, if you have forgotten that, we can have a small look into that rule again. So let's have a look to the ESTG. Let's go to paragraph 4, and here we have it. The profit is the difference between the business property at the end of the accounting period and the business property at the end of the previous accounting period, corrected by withdrawals and contributions. So here you have it. The business profit has to be calculated by bookkeeping and by making up a balance sheet at the end of the year. So indeed, that's our case here, what we have to do. And as that's clear, we can go. So it is to be determined by balance sheet. We now know this, have checked this. The date on which the profit is deemed to have been earned is the date of the closing balance sheet. That can be looked up in 7.4 KSTG, and you know what now must come. Naturally, we have to check if that's really true, because if you deal with cases or in general with tax law without giving proofs from the Tax Act, everything you say is completely worthless. So let's have a look. So here we are again. We need paragraph 7 this time, and we need 7.4. And indeed, 7.4 says for taxpayers who are obliged to keep books and make balance sheets, the profit is to be calculated for that period for which they make their balance sheets, called economic year or accounting year. If the economic year of such a taxpayer is not identical with the calendar year, then the profit from business is deemed to have been earned in that calendar year in which the economic year ends. By the way, naturally, if it is identical to the calendar year, then that rule leads to the same result. So that explains that I summed it up, what 7.4 sentence 2 says, that in all cases, the end of the accounting year decides where the profit is attributed to which year. Okay, so again, we have checked this and can go back to our ideas. So that introduction is up to this point automatically always true and always the same, apart from if it's a GmbH or an AG or so. But in principle, you can be sure of that just because of that simplification rule of 8.2. All the rest is the logical consequence. So you can answer my 3 standard questions for the treatment of events under income tax law very easily here. What is the type of income? What is the tax base, and to which year does the event belong? That's all very, very easy. So where do the problems come up? Well, you have now only one problem, because the tax balance sheet and tax profit and loss account have to be based on the commercial balance sheet and commercial profit and loss statement. That makes sense because, well, you don't want to do your whole bookkeeping twice. So you just look into your commercial bookkeeping, 5.1 ESTG says that, and you take over all the results into tax accounting, apart from the cases where tax law requires or at least allows a different treatment. That again can be found in 5.1 ESTG, and because it's an important rule, naturally, we should take a look and look it up. So here's again the ESTG. Let's go to the table of translated contents. Let's go to 5, and here's 5.1. Business people or merchants or traders who are obliged to keep books on grounds of legal rules, and yes, the GmbH always has to do that, and make balance sheets regularly, or who make books and balance sheets voluntarily, have to show that business property in the closing balance sheet, which has to be shown according to commercial law, except where tax law demands or allows a different treatment. Yes, ladies and gentlemen, here it is. So that's what we needed. That's a confirmation that what I wrote down just now was correct. So let's go back to our slides and go on with our ideas on how a GmbH case can be developed. So after we now know for sure that we have to take over the result from the commercial accounting, so the commercial profit and loss, then we know that we have only one remaining simple task, in quotation marks, to mark a bit of irony, namely to check if during the computation of the commercial profit and loss, something has been done what for tax purposes should not have been done this way. And if it has been done in a way which is not allowed for tax purposes, then we have to revert that and to replace it by the correct treatment, which is correct from the tax perspective. So, to sum it up, first, we begin with personal tax liability, either limited or unlimited, as always. Then, usually we have the 3 routine questions for an income tax event. That is, which type of income do we have? Which tax base do we have? For which year is it relevant? And here, due to the simplification rule of A2, everything's very easy. It's always income from business. We don't have to check the individual events. Everything is condensed into the total profit of the enterprise at the end of the year. And the relevant date is always the closing date of the balance sheet at the end of the accounting year. So all that is very simple. The only remaining task is to check how high the profit is. If everything has been computed correctly, the starting point is under 5.1 ESTG, the commercial profit. We have to take it over, apart from, and this is now the next step, apart from the few things which have perhaps been computed in commercial law differently than under tax law it should be done. And so now we have nothing else to do than to check every single event during the year if under commercial law that was treated differently than under tax aspects it should have been required. So what we basically have to do is to check every single event which happened during the whole accounting year, if it has been booked correctly under the perspective of tax law or not. How can that be done? Well, the recommended approach would be again 3 questions. First, what is the correct treatment of the event under tax law? Second, how has it been treated up to now? That means mostly under commercial law. Third, if there is a difference between 1 and 2, so if tax treatment and commercial treatment, or what has been done up to now, if that deviates, if there is a difference, you have to correct it and to let the difference vanish. So if, for example, a certain amount has been deduct it under commercial law, but you are not allowed to deduct it under tax law, then you have to correct that. So that step must be adjusted. That's a bit abstract. So let's just work on a small example. GmbH A has spent 1,000 euro on hospitality expense. So now let's ask what the three questions require. First, what's the correct tax treatment? Second, what has been done until now during the computation of the commercial profit? And third, if that was not the right step, which correction or adjustment will be needed? Now, only 7% of 1,000 are deductible under tax law, so only minus 700 should have been calculated. We did calculate minus 1,000 because under commercial law everything is naturally booked as expense. Otherwise, people would ask you where the money has ended up, and probably the accountant, the manager, or somebody would have face criminal investigations. So we have booked minus 1,000, but for tax purposes minus 700 would have been correct. How can we correct that? Well, if we replace minus 700 for minus 1,000, then the result will change by plus 300. Or you can do it by adding 300 back. To illustrate how that works, because that was a bit abstract again. Imagine how the computation of the commercial profit works. You have many entries in the books, many things which are added up, many other entries, and then in between minus 1,000 for hospitality expense, then again many other events, and the total is 100,000. Now, is it possible to find out what the effect of the replacement of the wrong number by the right number will be without adding all that other stuff up again individually? That might be 100,000 simple events or so. So let's have a look. We replace that by minus 700. The rest remains unchanged. Now the total cannot remain the same. The 100,000 cannot be the new total, because between the right and left column we have a difference of plus 300. So the total must also be going up by plus 300, and that's indeed what comes out. 100,300 must be the total result here on the right side. Good. Another example, GmbH has a profit of 500,000 under commercial law. It has spent 100,000 as expense for corporation tax. Correct treatment until now, adjustment. So what's the difference between 1 and 2? How can we turn the wrong treatment under 2 into the right treatment under 1? Well, let's begin. Corporation tax expense is not deductible because tax payments do not lower your income under German tax law. 10 number 2 KSTG tells us this, so correct amount would have been 0 deduction. Commercial law has nevertheless booked all the payment as expense minus 100,000. So how can we turn the wrong minus 100,000 into a positive correct 0? Just by adding back plus 100,000, because if you want to erase or revert a minus 100 in a list of summoners, you just add back plus 100, and the result is then as if the minus 100 had vanished. Yeah, to illustrate how that works, again, let's see it. Many different numbers in between minus 100,000, then other numbers, and all that adds up to 500,000 plus. Now on the tax accounting side, what happens if we eliminate the minus 100,000? Well, all the green stuff remains unchanged, unchanged, only one entry changes from minus 100 to minus 0. That gives a difference between the left and the right column automatically of 100,000 plus. Many other entries unchanged. The new total is no longer 500,000, but the difference comes on top. And so we have 600,000 as a new total on the right side. Example number 3, what happens if more than one event? So if the two events, for example, happen together in the same GmbH. Again, the 3 questions. And now we should replace minus 700 for minus 1,000. And for the corporation tax rate, corporation tax payment, 0 is correct. Until now, we have booked minus 1,000 and minus 100,000. So we need a correction of plus 300 and a correction of plus 100,000 in order to eliminate the 2 wrong entries. If you do that again, many different summations in between hospitality minus 1,000, many different items then which can stay uncorrected, then again one which needs correction, and it goes on, and in the end you have 500,000 commercial profit. On the right side, tax profit, everything remains unchanged. Now one entry is changed that leads to a difference to the former calculation of plus 300. The rest unchanged. Then again an entry which is corrected that leads to a difference to the left side of plus 100,000. Then the rest unchanged, and in the end the total can be taken over, but not really, because a difference of 100,300 comes on top, because we have these differences in comparison to the left side calculation. The new total is 600,300. That is how it works, ladies and gentlemen. So how you generate your tax profit based on the commercial accounting. Okay. Now, you can see there were some green entries. Green light, always the same treatment, left and right side. So some things will be treated always in the same way, because there is no deviating tax legislation on these events. On other events, you have a deviating tax legislation. Now, naturally, the consequence is it makes sense that when you set up your commercial accounting, that you create specific accounts for those events which will require a different tax treatment, because that simplifies your work at the end of the year enormously. Because you can directly say, let's say gasoline costs or so, that's one of the green accounts. But for tax expense, I set up a separate account from the other expenses, because tax expense will have to be corrected at the end of the year. So revenue from sales is probably always the same amount, so that can be one account which you don't need to review. Hospitality expense will have to be reviewed, and the numbers will have to be replaced. So it makes sense to book all the hospitality expenses on a different account, so that at the end of the year you have already a comprehensive list of everything which you have to check and correct. And corporation tax expense, naturally different account, at the end of the year, these are numbers which you have to correct. That simplifies strongly what you have to do at the end of the year when you have to make the transition from commercial accounting to tax profit or better taxable income. That, by the way, is the reason why most firms have many different accounts. They want to get the different information, what do they earn from which sources, where do they spend their money on, but naturally they will make separate accounts for things which later require a different treatment for tax law. And that is, by the way, a reason why under German tax advising legislation there is a rule that if You ask an outsider for help to set up your initial bookkeeping, your accounts. The outsider must be a tax advisor. You cannot give that task to a simple bookkeeping service. They later can do the regular accounting, but for which things, which accounts have to be set up, that is something where you know usually special knowledge of somebody who is very familiar with the field of taxation. So that is a task which is legally reserved if you take an outsider to tax advisors only. I hope that you understand the principle, so how it works, the transition from commercial profit to tax profit. And most corporation tax cases with a GmbH or AG or similar companies in German tax law require just to know about the differences between tax law and commercial law. So as we take over the rules from income tax legislation into corporation tax law when it comes to defining the income, naturally all the specific rules for income which you learned in ESDG, for example, non-deductible expenses, luxury and representation expenses in 4.5 ESDG, for example, also are important for corporation tax, so repeat them. Then trade tax is classified as a non-deductible expense 2 in 4.5b ESTG. Donations for political parties are always non-deductible, not even deductible as donations to charity. And naturally, there are some additional rules on non-deductibility. For example, sometimes it might be possible that a GmbH or another corporation has in its statutes some duties which they have to fulfill, otherwise their existence would be cancelled legally. That can be done if you set up a GmbH or an AG or another juridical person. You can say what they have to do following their statutes. And 10 number 1 says, well, if you have an obligation only under your statutes, this is not a business expense. Because that is something which your founders said what you have to do with the income which you obtain, and this is not necessary to obtain the income. The argumentation, I must pay that because otherwise I get legally killed and can't go on my business, that is not a viable, convincing argumentation for German tax legislation. This case is relatively rare. Far more important is 10 number 2, corporation tax expense and other tax expense for taxes on income. So foreign taxes on income or inland expense taxes on income. Both are non-deductible, including additional payments which are caused by these taxes, like interest charge for delayed payment or fines for handing in the tax declaration for corporation tax too late. Now, all these additional charges, which are additional charges to the corporation tax amount, is 10 number 2. Also, the solidarity surcharge, which still exists in Germany, at least for corporation, is a tax on income and therefore not deductible. Solidarity surcharge is 5.5% on the corporation or income tax burden. If you have to pay fines or other punishment payments because you violated some criminal law or similar laws, for example, for pollution of the environment or for cartel law violations, then these punishment payments are not deductible expenses. And a very important thing is, because that happens with every AG and many GmbHs too, at least with many bigger GmbHs too, if you have a supervisory board, that's an institution which supervises the managing directors on behalf of the shareholders. If you have a supervisory board and an AG, an Aktiengesellschaft has to have one under German corporation law, and the GmbH can, under the statutes, give itself one. In certain constellations, it has to have one. If it's a very big one and fulfills some other additional qualifications. Then, in all these cases where you have a supervisory board, half of the payments which are made to the members of that supervisory board to remunerate them for their services is not deductible expense. That's not really a convincing rule. It has mainly historical reasons. Just believe it. In these cases, you need adjustments. Naturally, there might also be things where revenue is tax-free. So, for example, amounts can be tax-free in Germany due to a double taxation treaty. Certain dividends which a GmbH or AG receives from other corporations can be tax-free. That is going to be discussed in a later chapter. 8b1 KSDG says that certain gains from selling shares in other companies also can be tax-free. Also that comes later. And there might be other rules which declare things as tax-free, partly or completely. So if you know that, we can think about a simple case. And here it is first, and then we are going to solve it. The Sond AG is very popular in Germany. It has its registered office, so the statutory seat and the place of management in Kleve in Germany. The accounting year of Sond AG lasts from 1st of June to 31st of May of next year. For this accounting year, the commercial profit has been correctly determined as 343,000, and during the computation of that figure, the following events were taken into account. Sond AG made prepayments for corporation tax of 60 and made a provision for the final payments of 15,000. Trade tax, prepayments, and provision caused expense of 70,000. Sond AG also paid 60,000 to the members of the supervisory board in total, by the way, ladies and gentlemen, not to each of them. So Sond AG is probably rather small. Sond AG gave gifts to selected business friends, which caused expense of 2,000 euro. The gifts ranged from a price of 50 to a price of 500, depending on the importance of the business friends in question. Furthermore, Sond AG has some time ago invested some money into the purchase of a house in France. They let that to tenants and made 20,000 euro from this year. And now under the double taxation treaty with France, France is going to tax that and Germany is out. So Germany exempts that money from tax in Germany. So it's tax-free here because it's taxed abroad. Sond AG had also sold a piece of land in Germany, which until then they had let to others as a parking lot. Now somebody has probably heard that you can sell private property which is let to others after more than 10 years of acquisition. But the question is, does that apply here? They owned that parking lot for more than 20 years. Now they sold it, and the question is, what happens? And your task is very simple. Solve this case. Okay, let's perhaps do it, try it together. So, ladies and gentlemen, let's just remember the most important principle. Let's begin at the beginning. Personal tax liability. Here we know that Sond AG is a juridical person, so KSDG applies. Furthermore, it is subject to unlimited tax liability. Paragraph 1(1), number 1 KSDG, because, no statement without given reasons. See it is in Kleve, so in Germany, in the inland. Then we come to the objective tax liability, so the events. And here we can bring a general introduction. And let's begin with that. The tax base has to be computed according to ESTG and KSTG rules. See paragraphs 7.1, 7.2, and 8.1 KSTG. Here everything is income from business, paragraph 8.2 KSTG, because the AG is unlimited taxable under paragraph 1.1 number 1 KSTG, and that was the condition for exactly that conclusion. So tax base is the profit, paragraph 2 to number 1 ESTG. It goes on, ladies and gentlemen. Let's go on here. To be determined, the profit by balance sheet, paragraph 4.1 ESTG. That is to be based on the commercial balance sheet, paragraph 5.1 ESTG. Deviations are only possible where tax law allows or even demands them. So the starting point for the calculation of the tax profit is the commercial profit, here 343,000. It only remains to check every event if a deviation from commercial law is necessary. Now to 1. Corporation tax expense. Correct treatment under tax law not deductible. Paragraph 10, number 2 KSTG, so 0. Until now, deducted as expense in commercial law with minus 75,000. Necessary correction plus 75,000. 2.2 trade tax expense. Not deductible under tax law. See paragraph 4, 5b ESTG, not KSTG. Sorry. Until now, so commercial law booked as minus 70,000, so the necessary correction is plus 70,000 to the result of commercial law. Supervisory board members under tax law, only 1/2 of 60,000, that is minus 30,000, are deductible. See paragraph 10, 20, number 4 KSTG. Until now, booked minus 60. So the correction is plus 30, because if I add back 30 to minus 60, I end up with the correct minus 30. 2.4. Gifts to business friends. Under tax law, only deductible if they are not more expensive than 35 euro. Here they are all more expensive. By the way, we need naturally the rule which proves that. And that rule is paragraph 4, 5, number 1 ESDG. Here they are all more expensive, so 2000 not deductible. That means correct is an amount of 0 as deductible expense. So, consequence of that, ladies and gentlemen, well, until, let's continue, okay. Until now, we had booked minus 2000. We need a 0, so the necessary correction is plus 2000. Now we end up with 2.5, the house in France. Correct treatment, tax-free in Germany, so 0 for German tax base. Until now, well, the commercial profit covers everything from all over the world. So treated as revenue of plus 20,000. Necessary correction. How can we let vanish plus 20,000 by minus 20,000? 2.6. Sond AG sells piece of land. Well, correct treatment. The piece of land is business property. So selling it is taxable. Correct treatment for tax. Plus 20,000 taxable income. Now surprise. Treatment until now, commercial law, plus 20,000. And correction, well, now the tax required treatment is the same as the one which was done under commercial law, so no correction in that case. Naturally, that had to happen sometime. You cannot think that everything which happens must be corrected. There will also be events where everything is okay. Naturally, we write that down then and feel well. Okay, adding it all up. We have starting point 343 corrections. Now we had because of number 1 plus 75,000, because of number 2 plus 70,000, because of number 1 30,000 plus, ladies and gentlemen, sorry. Because of number 4 we had plus 2,000. Because of number 5, 20,000 minus. Because of number 6, nothing. And now if we want to make a total of this, sorry. Then we have, and here a calculator can really serve us well, 343,000 plus 75,000 plus 70,000 plus the rest ends up with exactly 500,000. Now that's a coincidence, but a lucky one. Tax on that 15%, see paragraph 21, KSDG, so that is here 75,000 euro. Okay. If somebody would be interested in the solidarity surcharge, which is probably still going to exist for a certain time, then that would be an additional tax payment of 5.5 levied on the corporation tax rate. So that would be 4,125. That's just an additional information. The solidarity surcharge is going to be abolished in the course of time, so probably in a few years that last line is no longer relevant. Until then, it's a nice additional information, but from a theoretical point of view, as a solidarity surcharge is very plain and simple, it poses no real problems. You would also be fine if you limited yourself only to all the other lines here. Good. So here we have already done a first corporation tax case with a GmbH or an AG, and you see everything is plain and simple. The only thing which we still have to do in the future is to learn something more about cases where there might be a deviation between commercial law and tax law, or where you have to know some specific rules. That is going to come in the future. Yeah, and last but not least, what remains for me to do is to thank you for watching, and I hope you learned a bit from this small little lesson, and I hope to see you soon again for the next part of this lecture. Thanks very much and goodbye. Have a nice rest of your day.